Say man, it's your boy Ray. Super excited to hop on here with y'all today. This is another Wednesday Outlook call. Wednesday, I'm tripping. Sunday Outlook call. I do so many calls, sometimes I get mixed up. My apologies. But this is a call I like to do on Sundays just to kind of get people in the flow of things, start to really see what it is that we would like to see happen in the markets, and be ready for the potential setups for the week, right? So if you're, part of the mentorship, welcome. It's business as usual. If you're joining from the free Telegram, welcome as well. Super excited for you to have you guys on the call. We're not gonna waste too much time. We're not gonna be long, but we will be strong, and we're gonna go ahead and give you guys the value that you need in order to get to the next level, right? We're definitely here to give you guys some sauce. Definitely here to be able to help y'all see what it is that you need to see to become profitable traders, right? If this is your first time on here with me, my name is Ray Baylor. People call me Wall Street Ray. You guys want to give me a quick follow on Instagram, just in case you aren't already. I'm pretty sure most of y'all are. That is my IG page. Any other ones is fake, right? I do also have trading pages and stuff like that, but you'll actually be able to access that and see that through this main page, all right? But with that being said, again, we've been doing this here for quite a while. I've been trading now for about 5.5, going on 6 years. I've been able to help a lot of people, been able to help myself, help my family. You get the picture, right? But with that being said, not gonna waste too much time. We're gonna hop straight into it. This is the weekly outlook. I will start with the DXY momentarily just because that has such a resounding effect on all of the other currencies. All right. So with that being said, for the people that don't know, the DXY is the dollar index. And whatever the dollar index is doing, this should give us a lot of clarity, right? And a lot of information on what other DX or other USD pairs are going to do. All right. So, pairs like USD CAD, GBP USD, Euro USD, and even some of the other exotic pairs as well, because the dollar is so heavily influenced in the currency market, right? Now, in the next handful of years, I don't know, with BRICS and all of this stuff, who knows, man, what's going to happen in the next handful of years. But what I do know for right now, the DXY holds value, and it is important to understand what's going on, right? So with that being said, just starting off on the DXY, one thing I do notice is that, we did have some equal lows here that did get swept, right? First and foremost, that is interesting. This low here actually swept the liquidity of these two lows right there. Now, with that being said, I am fully aware that the market could probably want to turn around over time, right? We could get like this inverted head and shoulders pattern here that wants to send the market bullish. And, if that's the case, we could actually be looking at this as a higher time frame accumulation. All right. So if this does turn out to be an accumulation, we will end up returning bullish after a while. But as you guys can see at the top left of my screen, this is actually the daily chart. So with this being the daily time frame, even if I'm bullish long term, I can still be bearish for this week. And that's pretty much the way that I'm feeling. I am feeling like we can be pretty bearish, at least for this week, because just understanding, even if we were to come by later on, I do believe that the market needs to drop at least to, let's say, just to give you guys a round number, I'll say at least to 102, right? At least to 102. Really, I want to go a little bit lower, like 101.5, like the 101.5 area. But bare bones minimum, I'm looking for 102. So with that being said, if we were just to go ahead and measure that move, that would be us dropping a good, 200. Wait, there might be even 2,000. Hold on. Yeah, that's a good amount of pips. Not even gonna lie, that's a good amount of pips. So just with understanding that, I do want you guys just to be clear on the fact that, there are trends within trends. There's time frames that you look at where one time frame can be bullish and another one could be bearish. And the reason why that happens is because, again, there's trends within trends. So I'm just looking to see who's in power at the moment, right? So even though the bulls may come back into the market later on, I do feel like this area of supply has some strength, at least for this week, realizing that this is a high that led to the market eventually making a new low, right? Even though we came here, we retraced, and then we made a new low. Ultimately, this is the high that originated this new low being created. Now, in understanding that, we have to assume that there is some supply left in this high, okay? So if there is supply in this high, then this is essentially where the market can actually mitigate this area of supply to continue to actually push down. Now, for the people that aren't familiar with that terminology, what does mitigate actually mean? If we take a second and go over to Google, right? Because I know there's some people that are here from the free chat, so I'm not going to assume everybody knows what that means, right? It means to make less severe, less serious, or less painful, right? Now, what does that actually mean in terms of trading? The term mitigation comes from, it's like a smart money concept terminology because the big banks and the hedge funds, the institutions, they're the ones that are actually creating this chart that we see, right? In understanding that, they actually have to buy and sell against each other at the same time because they can't just push a button and enter positions the way that we do, right? In order for you to buy, somebody else has to be on the opposite side selling. And in order for you to sell, somebody has to be on the opposite side buying. So in understanding that, we realize the only reason why that's possible is because we're retail players, right? We may not have retail strategies, but if you actually take trades on MetaTrader 4 or Trade Locker, by definition, you are a retail trader, right? So in understanding that, we don't have the institutional capital of, 20, 30, 40, 50 billion dollars. So that means there's always going to be somebody on the opposite side of our trade. So meaning we can execute instantaneously. The moment that we push buy or sell, we're in our trade, right? But if we were to have billions and billions of dollars, we may actually have to wait a while, and we need to wait for liquidity to be engineered before we could actually take a trade. So the reason why this is important to understand is because smart money has certain ways that they engineer liquidity, right? This being one of them, right? This is what we call a buy to sell region right here, meaning the market bought up and then immediately sold right after. The reason why this is important is because the market will come back up to the initial buy in order to close or mitigate the previous orders, right? So what that pretty much means, and you guys could probably relate to this, if you've ever been in this situation, right? Let's say you took a buy right here and then you went in the drawdown. I want you guys to type a 3 in the chat. If you ever took a buy and you went into big drawdown, and meaning you was losing the trade, and you was just crossing your fingers hoping that the market came back to, your entry point. So that way you don't have to take that big loss, right? So a lot of 3s in the chat, right? Everybody's been in this situation before. So what that means is you were hoping to mitigate your loss, right? That means you wanted your loss to be less severe. And this is essentially what institutions do, but the difference is they do it on purpose, right? So they buy here and then they sell here. Just because they sold here doesn't mean that this initial buy was closed. This buy is still open, but after they gain more sellers, then they can come back, close that initial buy order, right? So they come back to the initial buys and then they close it. So that way they can add on to their sale positions right here, right? So this is essentially how the order flow of things goes, right? So with that being said, I do anticipate on this actually playing out. I do think that the supply left up here can cause the market to want to continue bearish right there on the DXY, right? If I just zoom in a little bit, I'm on the 4-hour chart. What it is that I see happening right now is not necessarily as much, it's not necessarily enough volume in the market at the moment for me to sell quite yet. I look for what I call footprints, right? And what I call footprints are for, big bold candlesticks to pop up in certain areas to match the candlesticks that created the point of interest in the first place. So when we look at these big, bold candlesticks that created that area of supply in the first place, I would like to see some sort of big candlestick form over here. It doesn't necessarily have to match the exact same size, but we should have some sort of influx of volume that comes into the market that tells us we can then sell. Now, I know there are people that look at volume with the volume indicator like this, or let me see, no volume. Oh, I'm on the DXY. They don't have the indicator. That's why. But I'll show you guys that on another pair. But I'm not specifically talking about the volume indicator. I'm talking about just volume in the sheer size of candlesticks, right? I feel like when we're trading, we need to see the candlesticks that are big because that tells us that institutions are active, all right? And when we know institutions are active, that's who we want to trade with. That's why they have that term, trade with the banks. You hear all these traders say trade with the banks. Well, that's exactly what that means. So when I see these small body candlesticks right here, that doesn't tell me that there's a lot of institutional activity, because institutional activity creates big candles. Retail traders like you and me, we create small candles, right? So as the market is starting to consolidate and go sideways, consolidate just means kind of being stuck going sideways. We have three phases of a market. We see consolidation, manipulation, right? Manipulation would be when we sweep up, when we push up to take the money resting above the highs. So this would be manipulation. And then we have continuation, right? So these are the three phases of the market: consolidation, manipulation, then continuation, right? Now, understanding that, I feel like we're in a consolidation phase. I would like to see this market push up one more time. And then I would like for the DXY to start shorting, okay, and taking us lower, at least for this week. Whether it's long-term bullish or bearish, I don't really care. I'm just looking, I'm an intraday trader, so I look at the market day by day, right? I'm not looking for, I don't really care the macro approach. You know what I'm saying? Like, I don't hold my trades for months, so I don't really care what the market's going to do in months. I'm able to adjust. I'm able to react. I'm able to change my analysis when I need to, okay? So with that being said, this is what I'm anticipating on the DXY. The other cool thing about this is we do have internal range liquidity that is forming literally in a perfect spot, because if we just look right here, the fact that we do have this high forming right underneath our buy to sell point of interest, this tells you that this high is going to be used as inducement, right? So if this high is used as inducement, I would anticipate us pushing up to clear it out, because there's probably going to be a lot of people shorting in this area, and we don't want to be too early to the party, right? A lot of times people start selling too early, they start buying too early, and then they get knocked out, right? So that is what I anticipate happening. Again, we may actually come way back down to these lows, but I'll cross that battle when we get there. For the time being, I'm looking for at least 102, but ideally, I'm looking for 101.5. The reason why I say 101.5 is because we do have this point of interest here, this area of imbalance forming right here at 101.35. So I'm gonna just take, the area like 15 pips above that. Just to be sure, just to be certain. All right. So with that being said, let's go ahead and take what we see there and actually see how we could apply it to different time frames, right? Or different currency pairs. I like to start off with GU. That's the pair that I trade primarily the most. Get rid of that. So with that being said, I actually been waiting on the potential buys for quite a while on GU. Market's been very bearish, right? And I kind of had to sit out because I wasn't getting my patterns for the sales necessarily. Last sale I actually caught was over here. I did send that example to you guys in the free chat as well. But I just been waiting for buy opportunities, right? I was actually looking for something potentially here, but I'm always mindful of the fact that the market can do two or three things, right? The market is either going to the market's always going to either respect a point of interest. It's either going to respect that point of interest and then go up, or if you still have faith in that zone, it might actually take that low out and then go up, right? So even though I wanted the market to react from this shaded area, I was always aware of the fact that they always has the potential to go underneath that area and then respect, right? So now that we are beneath that low, we did take the little liquidity that was left, right? And now if I look over to the left, we do have a little more demand here. We do have a sell before this buy rally here. So I am curious just to see if we can actually find some buying power within this area now. All right. Right here. So with that being said, let me move some of this stuff out the way for y'all. Right now, I am looking for the potential for some buys on GU this week. And it's primarily because I feel like the market has been bearish for so long. I feel like we do need a bit of a relief period. But even on top of that, the fact that we did clear these lows over here, that's another reason that makes me feel that, we can definitely get some of the potential buys coming in. We did clear a low that was created way back in, what is this, June 12th? All right. So June 12th is now September. So just understanding that, there's been a couple months since that low, or a few months since that low was created. Now we did clear out that low. I do feel like we have the potential to continue bullish from here, right? So in understanding that, now we can really go to our lower time frames and see, what type of patterns we see forming, right? Now, one thing that I do notice here, if I'm just looking real on a real lower time frame, we push down, we take liquidity there. I can come down even a little lower so you can see a little better. Then we push up, we actually break highs here. Not only do we break highs, but we come back to end up respecting this candle here. Then the market kind of takes off bullish. Now the market is respecting these lows, right? So if this happens to be that peak low, the market can potentially find some bullishness out of that area, which we already have here. So now I just want the market to retrace a little bit more to give me a potential buy opportunity, right? Now, I know this gap kind of confuses stuff a little bit, but we do have a heavy crossover. If you guys are course students, you know exactly what I mean when I say that, right? Our hesitation before we actually break structure is critical. Now, understanding that, like I said, just imagine this gap doesn't exist. This gap was created because of the spread, but I'm just looking at this as just like, the market is just going straight up. Like I'm not really paying attention to these two candlesticks right there. Now, understanding that, what I predict is going to happen, that the market will retrace into this area here and probably find some more bullishness, right? Now, the thing about this is the market hasn't actually started to retrace yet. So this can happen now. This can happen later in the week. This market can keep going bullish and then retrace later. There's no real way to know when it's going to retrace. All you can do is mark up your areas of interest and wait for them to be hit. So what I like to do is I like to set alerts, right? To let me know when my areas of interest are being hit or even getting close to being hit. So for me, I think the best thing to do would be to set an alert at 1.246. All right. So 1.246, add alert on GU. Now I'll actually get a reminder once that actually happens. And then I can go to my phone and be prepared to actually execute that trade. All right. So that is something I want to see. And again, that is assuming that this low wants to hold up right here. I'll make that a little darker so you guys can see. All right. That is assuming that that low right there wants to hold up. Okay. So if that low wants to hold up, I'm just pretty much anticipating order flow to continue. The same way demand was pushed up and then we got respected here. I'm looking for the same thing here. I'm looking for demand to be respected and us to continue to push up. And that essentially would help my case with the DXY, right? Now, obviously with the DXY, I did just say that it has the potential to sweep highs before pushing up. So I'm still open to that fact actually happening on GU, because think about it like this. If the DXY is going to push up and then drop, that means that GU is probably going to push down and then go up. So I'm keeping my options open for that approach as well. The thing about trading, guys, is like not everything is absolute every single time. So I give myself room to make mistakes. I give myself an ability to take a loss or two, finding my perfect entry. Because for me, if you guys have been trading with me for a while, you know I like trading super small stop losses, right? I trade with 5-10 pip stop losses at the max a lot of times, right? Unless it's like a pair like GU or something, I might go 15 or so. But with that being said, I had to give myself an opportunity. Sometimes I miss. Sometimes my point of interest slightly gets overshot, and then the market goes in this direction. So even though I want the market to react here and go up, I'm fully aware and I'm fully prepared for if it does this and then goes up. So the way that I risk, I'm going to risk 0.5% per trade on funded accounts or on live accounts that I'm trading. I've showed you guys in my community the size account that I have. So you already know it's no need for me to risk 2, 3, 4, 5% on a single trade, right? There's no point. So with that being said, I can risk 0.5%. I can end up being wrong on the first entry. Then on the second trade, right, I can actually take this trade with another 0.5%. And if it goes the way I want it to go, let's just say I start out losing the first trade, then the second trade goes the way I want it to go. Now you see the potential, because I have this market, I actually have this breaking and making new highs, right? So we're talking about a 300 pip potential. So even if I started out with a loss, I would gain potentially at 0.5%, I'll probably gain 8% on that trade alone. And more than likely, my stop loss is going to be smaller than what it shows here, because 18 pips is not something that I trade a lot. More than likely, I'm going to find a way to get this to 10 or less, 10 pips or less. So now we're in the 1 to 20, 1 to 25 territory on that trade. So, I've literally caught, last week was the first week in well over a month and a half or 2 months that I have not caught a 1 to 20 trade, right? Like the week before last, it was this GU sale right here, right? And that went 1 for 30. So I want you guys to really understand that, yes, I might take a couple bumps trying to catch that home run. But once I hit that home run, that literally can make up for 10, 15, sometimes even more losses than that. So that's just a way to, think about it. Eli just said it in the chat. 1 win will make back 5 losses. Exactly. Not that we're going to take that many, because we don't just be losing like that. I'm just saying you have to be prepared, right? The reason why most traders fail is because their expectations are out of whack, right? You have the wrong expectations. And I don't trade to lose, but every trade I take, I'm well aware that it might lose, right? So I'm still confident in my strategy. I'm confident in my win rate. I'm confident that any given trade I take is likely to be a win, but any trade can be a loss, even if it matches up with everything. So it's better to just assume that you can probably lose, and that way you'll use better risk management naturally. You'll go through the process better naturally if you have that approach. And a lot of people don't think about the markets this way. A lot of people think their strategy is going to protect them from losses, right? I want you guys to remember this. Everybody on this call, write this down. Okay. There is a difference between being profitable and not losing. Okay. One is possible, the other is not. All right. So it's possible to be profitable, but it's impossible to never lose. A lot of people think profitability equals never losing, but that's completely wrong. Profitability is a combination of wins and losses that equate to income, right? You win some, you lose some, as long as the outcome is income. Shout out to Drake. That's not my quote. That is a Drake quote. But you get the point, right? So understand your strategy does not mean you're not going to lose. So just prepare yourself because any given trade can be a loss. All right. So that is GU. I'm anticipating some bullishness either from this area that 1.246, or I'm looking for us to sweep lows completely. And then we can start to go bullish from there. All right. So now let's keep it pushing a little bit. Let me get my annotations out of here. Can't give it all away. I'm sorry, y'all. Can't give it all away. Right. So with that being said, I'm looking at GBP CAD. I am also seeking a sell, intraday sell with the potential, long-term buys, right? So I'm looking for a sell to buy scenario right here. I'm looking for this market to push up bullish, okay? Give us a sell opportunity. And after we sell down for, let's say, 200 pips. I don't know why I thought that wasn't going to be that many pips, but that's actually a great position, right? After we sell for about 195 pips, then I'm going to actually start looking for the possibility of us going bullish, all right? So that's something that I want to keep my eyes and ears open for. I am looking for the potential. If we just take a look at what's going on here, right? I could show y'all this. This ain't nothing crazy. It's really the terminology that is the most powerful. But anyway, if we just take a look at what's going on, we see that this market right here is clearly bearish, right? This market is clearly bearish. So, we're sweeping highs, making new and breaking lows, right? Then we come to the next set of highs, right? What happens here? We're sweeping highs, then breaking lows. Then we come to the next one. We're sweeping highs and then breaking lows. And you kind of see this trend happening, right? It's a trend of us sweeping highs and breaking lows. And you got to understand that the market is just going to go, it's going to go based off of what side is sweeping liquidity and what side is creating liquidity. Because all the market likes to do is take and create liquidity, right? It's either we're taking liquidity or we're creating liquidity. So since the highs are sweeping, that means the highs are taking. Since the lows look weak like this, you see how ugly these lows are? See this ugly low, ugly low. You see these weak looking ugly lows? That means the lows are creating. Even down here, we got relative equal lows down there. So the lows are creating liquidity while the highs are taking it. So that tells me that we have more bearishness left in this market. Then once we get down here, I'll just take a sec, come to the 1 hour chart. Once we get down here, then I'm gonna actually start looking for the potential for buys coming out of this zone right here. Because you see, we make a low, then we take a low. So now we switch our way of thinking. At first, the highs were taking liquidity. Now we get down here. Now the lows are taking liquidity. And now we could say that the highs are potentially leaving liquidity behind, right? And the reason why this is important to understand is because, these markets, more than two things can be right at once. It's a paradox, right? So what I mean by that is you can have a situation like this. You can have a situation like this, right? And you could say, okay, look, the highs are taking liquidity, so the market is bearish, right? But when you go to the higher time frame, you could also see something like this. You could see trend line liquidity forming. And then that would actually switch your analysis, right? Because now you see a low that's taking liquidity, and now you see highs that are leaving liquidity behind. So it's like liquidity can be created in so many different ways, but the lower time frame can tell you what's happening at the moment. But if you're able to, zoom out to the bigger picture the way we just did, you can see that even within all of that, there is still a bigger time frame picture that's going on, because here we have a strong low, or at least a potential strong low right here, right? We created a strong low right here because we took that low. Then we break structure, we make a new high. Then we respect that area of demand that made that new high. So understanding that, this gray shaded box can very well be an area of demand that sends the market higher. And this could just be a big impulse right here. This could just be a big impulse right here that creates a retracement right here, right? And if that's a retracement, then we'll end up continuing to go bullish, right? Pretty sure y'all all seen this pattern before, right? So in understanding that, you just kind of realize that, there's patterns within patterns. And that's the reason why we could see two different things on the charts and we could both be right, because you might be looking at it from a different perspective than what I am, right? So, and this is why, I'm not trying to turn this into a mindset call, but this is why it's so important to understand different concepts like this. This is why it's important to understand that, regardless of what your strategy is, yes, I'm confident in my strategy. I do believe I have a powerful strategy, but whatever strategy you trade, it don't even matter as long as you're consistent, because there's so many different perspectives of the market. You choosing a strategy is just you choosing a perspective. It doesn't mean it's the only perspective that the market can have. It's just a perspective the market can have. And then as you win some and lose some, as long as that outcome is income, that's how you know your strategy is profitable. All right. So just with that said, y'all see what I see here. The market created a strong high here. And I'll come down to the lower time frame. You can see it even better. Where we create a high, obviously this is a high that made a new low. Okay. So understanding that, that means that this is an area of supply right here. Okay. Any high that makes a new low, is an area of supply. So as supply is being respected, then we see that this high makes a new low down here. All right. So now understanding that, I'm looking to take a trade in an area of imbalance or whatnot, right? These candles here have already been rebalanced. We don't see those big bearish candles. We don't see a lot of institutional activity up there, but we do see a lot of imbalance right here. All right. So for me, I'm going to want to take this trade in this area, right? Anywhere within this shaded area would be cool, if I'm being honest, but I ain't gonna lie. The best thing you probably want to do to give you the best risk to reward is to take it on that buy to sell candle right there, right? Because if you can get in on that buy to sell candle right here, that's going to give you the best risk to reward right there. So you see, that's where we pretty much have it marked up at. Then if we actually target the lows the way we think we can, that will give you bare minimum 1 to 6.5. And if you guys know how I trade, any trade I take, bare minimum has to have 1 to 5 risk to reward. The reason why I do that is because with 1 to 5 risk to reward trades, you can be right 20% of the time and make money, right? So I just want to have an edge that's undefeatable, right? I have no doubt ever ever whether or not I'm gonna be profitable because the edge is so much in my favor. Even if I go on a bad losing streak, more than likely I can come out of it profitable at the end of the week or sometime bi-weekly. It just depends on how many opportunities are available. And that's another thing to take into consideration. Don't look for your profitability every single day because you're not going to be profitable every day. Look at it from a weekly perspective, bi-weekly, monthly perspective. Look for your weekly P&L, your monthly P&L. If you can do that, it's very hard not to be profitable. But if you look at it day to day, some days you'll be up, some days you'll be down. Then you're just going to be confused on whether or not your strategy works. So for me, I'm looking for GCAD to come up to 1.7136. All right, 1.7136. So once we actually hit that level, I'll be very interested to see if this market can fall over to the downside. Bare minimum, I'm looking for 150 pips. That's where I'll partial out. I would like to target even lower areas. I'll probably do most of my partialing out at 180 pips, but I do know we have the potential to go for over 200. So, that extra 50 pips or so can definitely be profitable, depending on what lot size I decide to drop. All right. So same as GU, I'm looking for a sell before a buy. This buy will probably be a little more delayed than the GU buy, but overall, I do think that they're going to come in strong for us. And then this trend line up here will get destroyed, right? Because that's what we call trend line liquidity. And that's the reason why trend lines work sometimes, but over time, they're going to fail because it's liquidity being built on top of it. All right. So cool deal, cool deal. Okay. Our ace is coming, family. All right. Gotta get that out of there. I ain't gonna lie. We gotta hide that terminology right there. I'm sorry. And look, it ain't that I don't want to give it to y'all. It's just like there's a lot of people that did pay for that sauce. You feel me? So I don't think that Ray is trying to gatekeep. It's not that. It's just, it is what it is. You get it, right? Like if somebody, paid for some value, you probably shouldn't just be giving away for free. Right. But you get the point. Anyway, just looking at GA, same thing, guys. Like the same thing I feel like is gonna happen on all pretty much GBP USD pairs, right? Or GBP pairs, excuse me. So all GBP pairs, I'm looking for a short sell-off followed by some bullishness to come into the market. Just looking at this over here on GA, obviously we created a low here, then we took the low here. So that means that low is strong because it took liquidity. Then as we're pushing up, we make fresh highs. In these fresh highs, we actually have relative equal highs left behind. So again, that tells us that the lows are taking liquidity, but the highs are creating liquidity because one high took the low out, the other high did not. So now you know what side takes liquidity, and now you know what side is creating liquidity for a future target. All right. I hope y'all understand what I mean right there. One side is taking, the other side is creating. So now that tells me, okay, this is probably my impulse right here. That's my impulsive move. This is my correction right here. All right, that's the correction. So that's the correction. And then we're going to get another impulse right there. All right. I never use that, but I never like look at it exactly like that because like that's like a real basic pattern. But I'm just trying to give you guys like a kindergarten way of looking at it. Like it's a real simple way of looking at it. But in all reality, all you really need to understand is that this is an impulse while all of this is a correction. And then you could also tell by the momentum. Just look at how fast it shot up compared to how slow it's dropping, right? That's something else you really want to pay attention to. It's popping up a lot faster than it's dropping. So if you can understand that, you can say, okay, look, it took the market one day, okay, one day and 1 hour to shoot up 280 pips. But then right after that, it took the market 5 days, over 5.5 days so far, to drop. So the market is dropping 5 times slower than it pushed up. So who has more power, right? This bullish impulsive move still has more power because the market is dropping 5 times slower than it pushed up in, right? So now in me understanding that, I also notice how this retracement is leaving behind liquidity, just how we explained in the previous currency pair. So now with me understanding that, I also see we have lows forming here that can probably get taken out. So once we push underneath those lows, I'll probably be anticipating some bullishness to come into the market here. As I explained with the other pairs, I am fully prepared to take a jab or two, maybe even three sometimes on this pair to see if it's going to work out in my favor. So with that being said, my first entry opportunity that I would love to see play out is going to be 9483, okay? 1.9483, all right? And the chance that that doesn't work, I will be willing to try to get in again underneath these lows. Once my stop loss gets hit, I'll probably be willing to look. If my stop loss, I don't want to say when, I'll say if it gets hit, I'll be willing to entertain another opportunity underneath this low, because there's always the chance that the market just wanted a little more liquidity, right? We could always look at it like, okay, I want this to be respected, but the market's going to do what it wants to do at the end of the day. So all you have to do is be prepared for certain outcomes and know how to react to them, right? So I'm just preparing myself to react. At the end of the day, I know if I'm looking to gain a 1 to 9 type of trade, probably even less than that, because my stop loss is going to be smaller than what you see it at right here. You know, it's probably going to be more like a 1 to 14, 1 to 13, 1 to 14, right? If I'm willing to make 14 times what I'm risk, of course I'm willing to take a loss. If I can make 14 times what I risk, of course I could take a loss. That's like you flipping a coin, and every time you win, you make $140. Every time you lose $10, right? I don't care if you lose. I don't care if it land on tails 5, 6, 7 times in a row. You're going to keep flipping because you know all you need is one time for it to land on heads, then you make 140. That's what it's like taking a 1 to 14 type of trade. Obviously, you might partial out on the way, but I'm just giving you best case scenario right there. All right. I gave y'all this last week on a weekly outlook, so hopefully some of y'all took advantage of that. That 111.885 played out perfectly. Came out, cleared those lows out as expected. So, you know, super glad that that actually played out to our advantage. I never really traded GBP Chef, so you know you can tell I was a little desperate for some pairs for a little desperate for some action, because you know the markets wasn't giving me much last week, so I had to resort to taking trades on G Chef and Euro Chef, and gladly both of them played out. So I'm not mad one bit at the outcome, because they both played out in my favor. Now with this, I probably say similar outlook, right? Similar outlook as the rest of these pairs. Lots of consolidation to say the least. Just looking at this on a 4-hour chart, I mean, obviously we see that this market is pretty much in a range right now. Can this market drop one more time out of these wicks? Possibly, but the lower we get towards this range, the less I want to participate in the potential sales of it, because you know you kind of getting in risky territory continuously selling. So right now, although I have sell to buys on the other pairs aren't consolidating as much as this one. So since this pair has a little more consolidation than the others, I'm personally not going to try to sell to buy it. I'm probably just going to, you know, skip out on it for this week, right? Let's keep it going. If you guys took Euro Chef, we're still in this trade, by the way, or at least I am. It is moving slow as dirt, like like I kind of expected it to. But took this trade, 15 pip stop, looking for a 78 pip take profit. So I'm still in this one. I'm pretty bullish on Euro Chef. Can I see it continuing from here? Let's see. Go to the lower time frame. See what we got. Uh, we do see this like demand chain being withheld. So I'd be curious. I'd be curious to see if the market wants to just continuously respect demand. Maybe the market wants to respect this low right here. We'll see. Um, I'm gonna take a look at some other pairs first, though. If we have to trade this, we can, but that just ain't the nicest pair I've ever seen. So the buy was one thing, but like just catching re-entries on this might not be something that I'm interested in. Catching it down here was one thing, but continuously taking it, I don't know about it quite yet. But I will say this is a good lesson right here though, because kind of how I'm expecting GCAD to go clear lows and then buy. That's exactly what this did. We had these weak lows here. We cleared them out with that big footprint. Remember what I told you guys? When you see big candlesticks or big sell volume come into the market, that's essentially where you want to be active, because that's telling you institutions are participating at that moment, right? So then we had these weak highs being left behind. Even up here, we had highs being left behind. And the fact that we do have these highs being left behind, that's why I am confident we will continue to the upside. All right. So maybe we can get an entry on that if it drops down to like 9 4 or 0.9544. Maybe we can take some reentries there. I'm gonna check out some other pairs first to see if there's anything else worth taking before that. This would have been perfect, but I wasn't paying attention to it. That's a textbook trade. If you know, you know. That is a textbook trade. But didn't catch it, obviously. Let's see if we can get another opportunity somewhere. Uh, I want to believe that the market can go bullish, right? I want to. But I feel like we can be getting set up because we have these weak lows right here. This ain't really a strong area of demand because we see how fuzzy those lows are. Do I always trade exotic pairs or mostly Forex majors? I trade anything, right? If you in my mentorship, what's my motto? What's our motto? Core students, what's our motto? Somebody type it in the chat. What is our what do you call our mission statement? Ronnie know what it is. Any pair, anywhere. Any pair, anywhere. All right. Any pair, anywhere. That's what we live by. Because I feel like all of these markets move the same. Yes, certain currencies have slightly different tendencies, but technically speaking, they all do the same things. So that's why this you can, apply what I do to currencies, exotics, main pairs. You can apply it to indices. You can apply it anywhere, right? So I do feel like this has the potential to be a trap. I see it, but I also see liquidity underneath it, right? I do just want to be aware of it. Okay. So I'm not saying we can't respect. I just want to keep my options open just in case the market decides to go a little bit low. All right. So with that being said, I'll probably continue to ride the sales down. I do see this point of interest though. I'm not going to be blind to it. So depending on how I'm feeling once we get down there, I might take a jab at it. Right. Once we get underneath, 6685, I might take a jab at it. But I just got to see how I'm feeling at that day. Like it won't be the first trade I take. You know what I'm saying? I'm gonna be looking for some better opportunities first. And then if I'm in other trades, I probably pass on that one. Okay. I don't really see much there. Nothing that I'm interested in. Euro CAD. It was going bullish for a little bit. Then it kind of came back to that entry, hit our break even. So at this point, I still want to be looking for longs. I just feel like the market may accumulate a little bit longer in this area. So we might range for a little bit this week, possibly sweep a low one more time and then go bullish. Overall, I do believe we will go bullish though, because we do have liquidity being left behind here, liquidity being left behind above that high. So this market has to eventually go take that. It's just finding that higher low. Where does it want to reverse from to go bullish first? So we can sit on our hands a little bit. The market does seem like it's ranging a little bit. It's going to consolidate. Once the market clearly manipulates, that's where we'll look for that continuation. All right. I feel like it can happen anywhere within this zone down here. So this is the 50% of that buy to sell or sell to buy, excuse me. Right here is the 50% of that area. So maybe we come down to 4545, right? 1.4545. And then from there, maybe we can get some action, right? But overall, I do believe that this area will hold. But again, probably just gotta go a little bit more bearish. I say maybe we clear out this wick right here that I have circled. Clear this wick out, and then we probably return bullish after that. Okay. Probably return bullish after that. So moving a little fast here, but let's keep it going. Full transparency, I did take a little L here. I was trading in those wicks a little too much, but now that they did get cleared out, same as GU. I know this market is gonna have to give us that breather eventually. I'm a little more comfortable trading GU because it's something I trade more regularly. This is something that's a little. I'm not the biggest fan of EU. I'm gonna be honest. Just not the biggest fan of it. But overall, just seeing where the market is now. If it wants to do something similar to GU, where it wants to push down first and then buy, potentially they come down to clear out this low, but we clear this low, but ultimately respect this one here, right? I'm open to seeing that happen. But again, I'm just not the biggest EU guy. For you guys that do like to trade EU, this is probably the only analysis you'll get out of me. Or, come take these lows here and then go bullish. This is the exact same thing I want to see happen on the DXY, just the opposite, right? So we come back to the DXY, take those highs, then drop. And Euro USD is pretty much a complete inverse of the DXY. So if I expect the DXY to sweep lows or to sweep highs, then drop, Euro USD will probably do the exact opposite. So I'm expecting us to take these lows because I do anticipate that there is money left behind. Take those lows and then start going bullish. All right. Yeah, EU is super manipulated. Yeah, it is, bro. It definitely is. That is a fact. Let's take a quick look at indices. I missed this beautiful sale because my alert did not get triggered. Like it just missed. As you can see, we zoom in a little bit. Like it just missed my entry. So I never actually looked at my phone when this happened. So that was unfortunate. So now it's like, and this happens, bro. And this is what I want everybody to realize. Like, if you super pressed for money, like don't trade feeling like, oh, I have to make this week. Like, there's gonna be times where you miss every trade you wanted to take, and then you only took the bad ones. So then it's like you got to show up next week, then the week after that, and the week after that, and it's like it's a continuous process of learning and growing. You know what I mean? So, this is what happened to me last week. I literally had to rely on G Chef and Euro Chef to pay me out because I missed all of my trades. And even the GU that I took ended up being a loss. So, last week I still ended up profitable, but that's like my worst week in a couple months. And it's just because I missed so many setups, you know what I mean? But including this one would have been a banger, bro. Like I'm still kind of mad I missed that. But at this point, it is what it is. I'm looking for the Nas to probably continue selling if I'm being real. I don't really see a reason for it to reverse yet. Can it reverse overall? Eventually, yeah. But I don't see the bullish pattern form yet. I always tell myself if I don't see a reason to buy, then don't stop selling. Okay. If you don't really see a reason to buy, don't stop selling. Unless the market is just in consolidation, then you sit on your hands, then you don't do anything, right? But this market is still very much bearish, in my opinion. Maybe we just come clear some highs. After we clear some highs out, maybe we can just continue to the downside. Clear some highs, continue to the downside a little bit more. That's the only real possibility I see. So, yeah, a little unfortunate though, because I was literally waiting on this setup, bro. Like I knew this how it get swept, then it got swept, and it just got away from me, unfortunately. But now I do feel like this market will probably end up continuing to the downside. I see us reaching, like 14.9. Yeah. Like if we can go to like reach like 14.9, then from there, I see the chance for some buys to come into the market from this sell to buy candle. Okay. Right here. Because obviously we did a quick lesson on mitigation at the beginning of the call. All right. So that sell to buy candle right there. That is something I could see us coming back down to mitigate. So if that is the case, I'm gonna just go with bearish order flow until we get down there. So once we get up into this area, I'd be curious to see if we can get some continuations on the sell. This is more like a redistribution type of setup. This is more like just a continuation trade. It's the only thing I could see me taking, clearing highs and targeting, lows. And then once we clear out these weak lows here, maybe we'll reverse our analysis and shift to the buys because now you realize those lows are taking liquidity, right? These lows are creating, this low is creating, this low is creating. Then once we run into the low that was strong, that's where we could potentially see bullishness coming into the market. All right. So that is my NAS setup. Take a quick peek at US 30. Same thing essentially. Same thing essentially. Um, I want to see us clear this high bare minimum. Continue a little bit lower. Once we fill out this area down here, we could potentially start going bullish again because this low cleared liquidity, then made a new high, right? So there's a good chance that this is, an impulse. This is a correction. Then as we come back down, we could possibly impulse again. So that's what I'm looking for. I want us to drop down to like 34,200. So I'm looking for more bearishness this week on US 30. I really primarily focus on NAS, but I know a lot of y'all like US 30. So that's why I'm pretty much breaking that down for you guys. All right. And last but not least, let's take a quick look at the DXY pairs. I did hop in USD CAD last week. It's going good for a little bit. Then the market, actually I didn't. I'm tripping. I did not hop in USD CAD. I hopped in GU instead. I was wanted to take USD CAD, but I'm glad I didn't because it only dropped. The market dropped like 10 pips or so. So I would have went break even either way, but it's just one of those scenarios where you take the trade, it goes a little bit in profit, then it knocks you out, right? So now that the market actually did do what it's supposed to do, which was come out there, clear those highs out, similar to the DXY, I do believe now that we will probably get the bearishness that I was anticipating last week, right? So considering that we cleared highs over here and we cleared these highs, now seeing that massive sell-off, I see, bearish institution or bearishness from the institutions are becoming more prevalent. I wouldn't be surprised at all to see some sales come into play. I do want to see us come clear these highs first. All right. That would be the best bet for me. Obviously, I know a lot of people are going to want to sell here. And I'm not here to tell you what to do, but I do feel that this will probably be a trap. And this will probably be the high that you want to sell from. All right. Because the market doesn't always respect fair value gaps, especially ones that don't have any internal range liquidity as well. So here we do have this buy to sell candle, but we also have some, liquidity we could sweep on the way up as well. So I trust this a little bit more. And plus it's just higher in the trading range. Like the higher you can get in, the better. Because now if the market comes up here, I could take the trade here and put my stop loss right there, right? So the steeper the retracement, the better your overall positioning is to take that trade. So now we're talking about a 10, 11 pip stop to gain 72 pips instead of me taking a trade down here. And I don't know where the market could possibly retrace up to. But if I could take the trade up here, it's only so much space the market has to reverse. Because if I take the trade up here, I'm anticipating that high is going to hold itself, right? So if this market retraces back up here, let's say to 1.368, I'll be more than happy to take that position, right? 1.368. I say we could probably do a 10, maybe 11 pip stop. Like I said, every trade I take has to be at least 1 to 5 just for my first take profit. My first take profit will be at this low, okay? Because once we clear lows, anything can happen. So I like to take trades here. Once I get here, I partial out. Not only do I partial out, I always adjust my stop. So now I've secured profit and also taken my risk off the table. So now anything that happens after this is just icing on top. Anything after this is just bonus money. It's just house money to play with. All right. I don't really see nothing on USD JPY, to be honest. I don't trade UJ, so if any of y'all do, I'm sorry. I marked this up for a friend. But me on a daily basis, I don't really trade UJ. I don't trade USD CHF either. G Chef and Euro Chef was just anomalies, because that's not something that I do often. But outside of that, those are pretty much all the pairs that I personally look at, guys. We went over all of our Euro pairs, our GBP pairs. We went over USD pairs. We went over NAS. We went over US 30, and also gave you guys a lot of gems to go on top of it, right? This will be uploaded to YouTube, okay? This will be uploaded to YouTube. So once it's uploaded, I'm going to drop the link into the free Telegram, as well as my course students and stuff. So with that being said, all of you guys will be updated when this drops. So I would definitely love if you guys, like, comment, subscribe. I'm definitely trying to get more into this YouTube thing because, like, just being honest, I've done thousands and thousands and thousands of Zoom calls at this point, and I literally have like a few videos on YouTube. So it's just, at this point, it's kind of like, rather than being mad at all the time I wasted or time that I missed, opportunities I missed to post, I'll just start posting now, right? Like, I don't plan on stopping trading no time soon. So no better time to start than right now. I'm just going to be present in the whole process. So yeah, if you guys can definitely help me grow, like, that would be huge. I would definitely appreciate that because I want to get big on YouTube. All right. So with that being said, I hope you guys enjoyed this call. Do we have any comments, questions, concerns just before I hop off? Any comments, questions, or concerns? Again, if you guys want the setups, I will send this. I will post this on YouTube so you guys can go watch it. All right. The YouTube, man, I want to say it's my name. Like, I'm not quite sure. I think it's Raymond Baylor, but let me see. I don't even know. I haven't posted on it in so long. Yeah, it's Raymond Baylor the third. So I got, like, with the three, like the little three symbol. But like I said, I'll post it in my chats and stuff. So you guys will know what it is when it gets posted. All right. So with that being said, I definitely appreciate you guys. Much love, much appreciated. Ronnie, I see you, bro. I'll reach out to you privately. Somebody asked me to look at gold. I'm not big on gold. I'm gonna be honest. Gold is not my friend. I wanted to take a sell here yet last week, but it never tagged me in. I wanted to take a sell at 1948. Now I'm just looking for, I think sales will continue, but I think buys have an opportunity to come in either here or underneath this lower down here. So either a buy from here, like the 1910, 1911 area, or we come down to 1895 and start looking for buys. That's the only options I really see on gold. I don't like taking continuations on gold the further the market gets. The further away from the peak high or the peak low, I don't like chasing it. All right. But with that being said, definitely appreciate you guys. Again, video will be uploaded in a moment. See you guys at the top or from the top because the bottom is way too crowded. And never look down on anybody unless it's to help y'all up. Hope y'all appreciated this call. Again, give your boy a follow on IG if you can. If you found this call valuable, I definitely appreciate it. Reach out, connect. If you guys need help with anything, feel free to reach out, message me. Let's work. All right. See you guys. Love y'all. See you on the next call. Peace.